Everyone, so in this video I will be discussing the topics of entry, exit, and stop loss. So above this video you should be seeing about 1 to 2 pages of information regarding entry, exit, your exit, and your stop loss, and why it is very important to understand that based on specific patterns. So a quick note before I start this video: if you see me looking up, I'm just looking up at my notes that I've taken for this video. So getting started, I broke down one of my analysis about a week ago on a stock called CGC, and I want to let you guys know how important your entry, your exit, and your stop loss is. So going into this trade, I always preach that previous support levels are current resistance levels, and inversely as well. So this yellow circle we seen was a support, and then CGC came back, and now it's a resistance, and that's where I entered my short position. So your entry should always be above your stop loss and below your exit for a long bias trade. But if you are taking a short bias trade, your stop loss should always be above your entry, and your exit should always be the last one to the bottom. So for example, so my entry was at 43.06, exactly where this SMA indicator is. So my entry was here, my exit was a break of these lows, because I seen that this 42.5 level was very crucial. So this was my target exit point, and my stop loss was a break of the pattern. So my stop loss was above this green line, so I was risking about 50 cents for about 50 cents, which isn't a good risk reward, but I wanted to take this trade based on the chart and show you how important it is to understand that your entry, exit, and stop loss has to be on both your risk reward and your chart. It cannot be on only one. So I got in at pretty much $43. I was actually risking the 43.35 area. So I was risking exactly 35 cents for a potential 50 to 60 cent margin profit. So that was in favor of reward, and based on the chart it made sense, right? So if it breaks above the common line that I see, basing it off the pattern that I take, or the trade that I take, sorry, then it breaks the pattern, and the pattern that I seen prior is no longer irrelevant, right? And my exit was based on the chart, because I seen a strong support at 42.50, and I did not think CGC was gonna break this low. So I based it on my risk reward, which isn't the best. It is about 1.5 to 1. Not the best. I usually have 3, 4, 5, 6 to ones, but I understood both, and the result of this specific one was exactly how I planned, right? So exactly when it came down, it came down exactly to the 42.5. I took 40% off there, and I was still holding mine. So this is exactly what I did. So I took 40% off here, and then as it came up, my stop loss was raised at break even, meaning that I'm already in this trade for zero risk. That's something that I really want to enforce, is if you are already up on the trade, continue to move your stop loss. This is called a trailing stop loss. This is something that a lot of traders use when it comes to swing trading and long-term trading, but I don't see it much in day trading. So as CGC was coming down, my stop loss was following it until boom, it hit my average price, my entry, and that's where it is becoming break even. So I'm already locking in those profits there, which is a very good thing to do. So gratefully, it came back up to these indicators, the 50 moving average, which is this white line, and then the green SMA, which is a 200 SMA, and it rejected all the way down. I took profit here, right? I think it was 42.28. I think I took my the rest of my 60%, and that was it. So the importance of this is to realize that your entry should always be based on the chart and the risk reward ratio. Your stop loss should always be based on that as well, and same with your exit. And your stop loss should always be a price at which the pattern is broken. So in this scenario, I will say, is I seen this green line as a line of I guess significance. So I was only basing it off of this one line, and the VWAP as well was here. So if it breaks above the line, my pattern that I seen was no longer relevant. So why still risk my own money if I'm not sure exactly where this chart or where this stock will go? So that's exactly where your stop loss should be. Your exit, I recommend taking some profit and then holding some at once your stop loss is at break even. So once it came down to my target, I should have taken all of it off, but it was still showing weakness. So I took 40% off there. I should have taken a little more. And then once my stop loss got raised or lowered down to my entry, I was pretty much in the trade for zero risk. So I was already up 40% of what I've taken out, or I wasn't up. The 40% that I've taken out was all profit, and then now I'm in the trade basically with zero risk, and that's something that is amazing to do. That once you're already in the money, meaning that the stock is already above your entry, and then your stop loss moves lower. That's a very good position to be at because, like I said, you're at zero risk. And then also your exit should be based on the chart and not just the risk reward, because if you trade a penny stock that is moving 5-10% in a matter of minutes, and you don't want to risk more than 3%, chances are it's going to hit your stop loss and you're going to get stopped out, and then it can move to your exit. So always remember the chart that the stock that you're trading has to be correspondent to your type of risk reward. So for penny stocks, I like to risk about 1-2% on these cannabis stocks. That is just me. But when it comes to penny stocks, I could be risking 5-6-7% because that is only based on the chart. So make sure that when you are taking a trade, you understand your risk reward ratio, which I discussed, I believe, in this section, and also the chart and what the chart is telling you. And if you do this with your entry, exit, and your stop loss, you would be okay. So I hope you all found this video helpful, and keep on reading.